Okay, so if it's truly the only source of income is going to be support payment, we have to show that through a court order that they've been receiving it for 6 months.
Right.
So which means um, they might have to wait 6 months post divorce before they can go ahead and take a new mortgage out, and that's part of the things they put in the settlement agreement is the timing of like they'll say you have up to maybe a year or two to refinance, and
Right.
and everything's based on what they're going to receive, and there's other ways of creating income. For example, let's say someone's going to get a lump sum. The departed spouse is leaving and giving the retaining spouse, a lump sum of money. Maybe it's 500,000 or even more. We have ways of it's called asset depletion. We can calculate income just based on the lump sum itself to help them qualify. So there's all different ways of doing that. Sometimes you got to sell the house. I mean, here's the thing. When I first speak with people, the very first thing I ask them is, "What do you want? What would be the ideal outcome?"
Right. I
And
asked that too. Right.
yeah, and I say before you answer that, you got to get this one word out of your head, and that word is unrealistic. Let's just your wildest dreams. What do you want?
Mhm.
Um, and because I had a situation like that, husband and wife. The husband was leaving, and he said, "I want a $200,000 settlement from equity buyout." And the wife's like, "There's no way, that's unrealistic." I said, let's keep talking. And I said to her, "How long do you plan on staying in the house for?" She goes, "I just need 4 years." I said, "All right." So I said, "All right, if let's pretend we refinance. Yes, you have a higher interest rate. It's going to cost you, an extra 600 or 700 a month." And she's like, "I can't afford that." I said, "But you have a car payment of 700 a month. Let's negotiate." And there was about a $30,000 balance on it. So the husband agreed to take over that payment. So we put in the settlement agreement that he's responsible for the $700 a month payment and that he would pay off the car. And that solved that problem. He got his money and she got to stay in the house for 4 years without feeling any financial burden.
Right. I
You know?
tell clients all the time, John, every divorce agreement is like a patchwork quilt, right? Right. Like
Yeah.
each one is different. Anything is up for grabs. Anything is negotiable. I think we've heard it all as far as when it comes to all sorts of agreements out there. So, how do you know if keeping the house is actually realistic? Because I find myself guiding clients sometimes. Do you really want this huge house and the upkeep and the roof goes or the furnace goes or a tree falls or lawn maintenance? Like, have you crunched the numbers to find out how much it costs to keep this house going? And do you really want that responsibility, or do you want a townhouse where you could just drive in and drive out with no responsibilities? What do you say to people about the realistic nature of that?
Well, we go through the numbers, because what people don't expect. Again, the the support payment that they may need. How long is it going to continue for?
Right.
That's yeah, you might be able to afford the house right out of the gate, but what's going to happen? 3 years from now, if you want to keep the house for 6 years, maybe that plan may not work. So try to have an equity, an exit strategy. Um, one of the things I wanted to mention too, I think that what a trend that I'm seeing, that people, I call it a mistake, is they come up with a number of how much someone's going to get without even getting an appraisal done.
Uh-huh.
And so what happens is then they go to try to do the refinance, and maybe the appraisal comes in less than what's able to allow them to take out the equity buyout, and then the whole plan just falls apart.
Falls apart,
And
right?
definitely. So I would say, you know, the question is, it's not so much do you want to keep the house. It's really, will the lender approve, the structure required to keep it. That's really what it comes down to.
Right. And when it
And
comes to appraisals, I mean, you want to have your own appraiser because, one might want the house to come in high, the other wants it to come in low for their reasons, different buyout reasons. So you really need to have a couple appraisers unless unless you agree on someone who you think is fair, right? So, can you explain, Don, how does someone take over a mortgage instead of refinancing? Is that possible?
Yeah, it does happen. It's what you're talking about is assumption clause, assumable mortgage. So not if it was a government mortgage like an FHA or a VA, maybe some adjustables. They have an assumption clause in it, and you can usually see that in the closing disclosure. There's a line item that says this loan is assumable, this loan isn't. So what that means is if someone wants to get off the mortgage, the other person who's going to retain it still needs to qualify for the mortgage,
Right.
and that process takes. I just talked to someone, and he said the lender told him it would take 9 months just to even look at the application.
Hmm.
So sometimes people don't have the luxury of time. In his case, he didn't. He just said, you know what? All right, he goes, what are the payments going to be if I refinance? And I told him, he's like, fine, I'll do it. I'll chalk it up to this is the cost of divorce,
Yeah,
and
there are a lot of costs to divorce, right?
yeah, yeah. So, and then of course the other way is just if you want to take over the mortgage is, if you can qualify to, refinance, you can do that as well. A lot of people just do that. They just want to just move on.